Namaste. Today, we explore how Indian investors can tap into global markets through mutual funds, unlocking new growth opportunities. Global investing offers diversification, access to high-growth sectors, and potential currency benefits not always available within India. Diversify into cutting-edge industries like technology, AI, and electric vehicles, which might be underrepresented in the Indian market. Limiting investments to India means missing out on 95% of the world's market capitalization, increasing concentration risk. A balanced portfolio, combining Indian and US equities, can significantly improve returns per unit of risk, buffering against country-specific uncertainties. Indian investors have several avenues to access global markets, with international mutual funds being a popular and accessible choice. The RBI's Liberalized Remittance Scheme, or LRS, allows resident Indians to invest up to $250,000 per financial year in foreign assets. International mutual funds like the ICICI Prudential MNC Fund focus on multinational companies with Indian consumption exposure. The Motilal Oswal Nasdaq 100 Fund of Fund provides direct exposure to the Nasdaq 100 index, comprising major non-financial stocks. Another option is the Edelweiss US Technology Equity Fund of Fund, offering access to the dynamic US technology sector. When evaluating these funds, consider their historical performance, portfolio strategy, risk management, and expense ratio. However, global investing carries risks, including currency fluctuations, market volatility from global events, and political uncertainties. Also, be aware of different tax implications for foreign equity investments and potential transaction costs like foreign exchange fees. Let's look at some hypothetical past 3-year performance examples for illustrative purposes, remembering past performance does not guarantee future results. The Motilal Oswal Nasdaq 100 FOF showed a hypothetical 1-year return of 35% and a 3-year CAGR of 28%, reflecting strong US tech growth. The ICICI Prudential MNC Fund had a hypothetical 1-year return of 22% and an 18% 3-year CAGR, tied to multinational companies. The Edelweiss US Technology Equity Fund of Fund demonstrated a hypothetical 1-year return of 30% and a 25% 3-year CAGR, linked to the US tech market. The Indian rupee's depreciation against the US dollar can boost foreign investment returns, but currency fluctuations can also negatively impact them. For personalized advice, always consult a financial advisor to align global investments with your individual circumstances and risk tolerance. Stay informed about global market trends, economic developments, and regulatory changes to make well-informed investment decisions. Thank you for watching, and we wish you success in your global investment journey.